Sunday, September 22nd, 10:53 a.m. New York time. Welcome to Winning Wall Street's Money. This video, I'm going to discuss currencies, yields. This past week, past Wednesday, if you're not aware, the United States Federal Reserve, also referred to as a central bank, had a meeting. They voted, and the majority of them voted to change interest rates. Top leadership of the Federal Reserve used that information to make his decision, and he decided to change the interest rates to lowering them by 2 basic points. Keyword basics, basic points. 2 points, half a point, depending on which media outlet you want to hear them say it. Yeah. Again, 2 points, half a point, 2 basis points. It's been a while since they changed the interest rates, but they changed them lower. And we have more meetings still ahead of the year. Give you some more insight, since some people are not situation aware. The United States is a democracy. Not all nations have the same style of democracy. United States legislative branch, which is the Congress, and the 2 parties of the Congress, one being the House, one being the Senate. Well, the Senate has the overall vote who heads the central bank. The president nominates them. United States Senate has a hearing, and they vote, decide if they approve that person. Again, not all democracies are the same. The point here is not one part of the United States government has overall say. That's better than many other democracies. Whereas a nation that's not a democracy like North Korea, you wonder why their economy is not growing so well, and they have weaker GDP. Again, wanted to share that with you. Most people are not situational aware of that. First, I'd like to show you the yields. U.S. Treasury yields, keyword U.S. Treasury yields, because you have yields on municipality bonds, corporate bonds, but we're talking about U.S. Treasury yields. Well, when I'm looking at Treasury yields, higher durations, lower durations. Looking here at the 30-year yield, and this is the weekly chart. 5 years. Here's a low for the past 5 years. Here's the high for the past 5 years, the 30-year yield. Yields go lower, interest rates go lower of the U.S. Treasury. Look, we're in a markdown phase, 30-year. New low for the year. So if you want to tie your money up, commit it to a longer term investment, you could trade 30-year fixed income products, get locked in. And we're not as high as last year. New low for the year. So if you buy them today, tomorrow, you're earning less money on your investment capital because the yields are declining. U.S. Treasury paying lower interest rates on those fixed income assets. Good for the taxpayer, but the investor, not so good for it. Now we're looking at a different duration, the 10-year yield. Here's the low for the past 10 years. Here's the high for the past 10 years. We're in a markdown phase, made a new low for the year. 5-year yield. Here's the low. Here's the high. As will, markdown phase, new low for the year. We'll go to a shorter duration, a 2-year yield. Here's the low for the past 5 years. Here's the high. Markdown phase, new low for the year. Similarity, longer duration and a shorter duration. They're all in the markdown phase, paying lower interest rates on these fixed income products. Some people may decide not to continue buying these, take their investment capital and park it somewhere else. There's other opportunities for fixed income. Munis, another word for munis, municipality. city, township, county, states, they sell bonds also. And different yields they're paying. Then you have corporate bonds. Yep, not all companies, but lots of companies. Give an example like Disney, Verizon, Walmart. At different times, some of these companies sell bonds. Same with financial institutions. And then you have international nations and businesses that also. So again, big selection of places you could park your money in if you're looking for fixed income. Now, typically when a nation central bank changes their interest rate, it impacts their currency. We get to that in a minute. But I want to show you, if you're not able to participate in investing in these yields, there's another product you can use. It's a stock ETF, and it trades inverse. So we have here the yields markdown phase. You have the stock ETF, TLT, trading up. Nice, trading up. So you can go outright and buy the stock ETF. The last price was $98.88. So if you ever heard the term, the strategy investing, dollar cost average, and if you think this is going to continue up, which the yields you would be wanting to see them continue down, you could buy the stock ETF, dollar cost average, making money as it goes up. It also has options on it, many opportunities. Let's go to the currency of the US dollar. US dollar index is the index of several currencies. It's not a pair. Oh, we'll get to those momentarily, but the US dollar index is comprised of several currencies. Give them in the order. First, the euro, the Japanese yen, the British pound, Canadian dollar, Swedish crown, and Swiss franc. Yep. So when those currencies move, they have an impact on the US dollar. Okay, the majority of the US dollar index is weighted heavily in three currencies. The euro making up almost 60%, the Japanese yen making up almost 14%, and the British pound making up almost 12%. So those three currencies, again, are heavily weighted in the US dollar. Look at the past 5 years. Here's the low. Here's the high. Since last year, here's the high of last year. Here's the low of last year. We are still inside the range of last year. Huge consolidation. This green horizontal line has been acting as a demand zone for buyers. Accumulation. We currently made a new low for the year. Still inside the range of last year. But we're in a markdown phase. Since we're in this prior demand zone, we still may have buyers in here. Time will tell. Which is interesting. We have not taken out, again, the high of last year, nor the low. Where you have the yields I showed you, the high duration, low duration. They all made new lows for the year and trending down from their prior years. So again, one reason is US dollar is considered a safe haven currency. Same with Japanese yen, Swiss franc. But the overall, it's the US dollar flight to safety people buy. Again, most of the world still uses US dollars and price commodities for US dollar because they have trust more in our nation and our US treasuries to be purchasing. May not be the best. Things may change down the road. But it's a confidence level. It's the confidence level. We still show confidence. People still have confidence in buying US dollars or US yields. First, I don't see that many of them going to buy the Russian ruble, nor the Russian treasuries, nope, nor the India rupee, and confidence and trust in the nation. And I should say that also goes with real estate. Yeah. Whereas other countries, you might buy real estate, but you're not a citizen, and they might kick you out of the country or deny you entry. And then you don't have access to your real estate property. It happens in some countries. Let's go into the major currencies now. In the US dollar. These are currency pairs. And these currency pairs I'm showing you are all against the US dollar. These are in the CME futures exchange. There are different futures exchanges. So look at a 5-year chart. Each candle's a week on the euro. Here's the high. Here's the low. Similar to the US dollar, the euro is still inside the range of last year. The euro is trending up, market phase, made a new high for the year. It's below this supply zone, that red area, and above this demand zone. Remember, I mentioned that this is a heavily weighted in the US dollar index. Again, it's one of the big go-to currencies in the US dollar index. If you don't want to trade the US dollar index, you could trade the euro. We'll get to that in a moment. We'll actually show you right now. If you want to trade the US dollar index, there's also a stock ETF. So if you're bullish the dollar, you could trade UUP. Yep. So when the US dollar index goes up, this goes up. If you're bearish the US dollar, there's another stock ETF you could do. UDN. Oops. There we go. This trades inverse. So when you're bearish the US dollar, this goes up. Got it? And if you want to trade the euro, there's another stock ETF. So if you're bullish the euro, this goes up. Oops. FXE. So many opportunities, trade currencies in the Forex market, the futures market, the stock market. And they also have options. All right. We already saw the euro. Let's go look at the second largest currency in the US dollar index, Japanese yen. Here's the high for the past 5 years. This year made the low. It's currently in a markup phase off the low. And it made a new high for the year. Wow, big difference since earlier this year. Still below the high of last year. Yep. So key area, look at the swing points. So we see the euro and the yen rising against the US dollar. Another reason the US dollar trades reverse. Now the third largest currency, the British pound. Here's the high for the past 5 years. Here's the low for the past 5 years. It's made a new high for this year. Australian dollar, new high for the year. Still inside the range of last year. Here's the high of last year. Here's the low of last year. Yep. Big consolidation here too, Australian dollar. Canadian dollar, it's still inside the range of this year. Yep. Here's the low for this year. Here's the high. So big difference. It's in the middle of the range of the year. We saw the other currencies making new highs. So Canadian dollar, huge consolidation inside the range of last year and not big impressive moves. Nope. Again, these currencies I'm showing you, those nations also have central banks and they also change their rates independently, their yields. Swiss franc, here's the low for the past 5 years. Here's the high. Made a new high for the year. Again, I mentioned this is one of the safe haven currencies that formed like a bearish pin bar. Interesting. Bearish pin bar at a key level. Mexican peso. Here's the low for the past 5 years. Here's the high for the past 5 years, which was made this year. And here's the low for this year. Huge trading range. It's in a markdown phase. They had elections this year also. What is interesting, small trading range for this past week, really small. And a Swiss franc, another safe haven currency I mentioned. Here's the low for the past 5 years. Oops, did I go wrong? Wait. Yeah. The Chinese yuan. This is on the Forex exchange. That's why you see letters that are numbers. So when this goes up, it's stronger US dollar. When it goes down, stronger won. Here's the low for the past 5 years. Over here, here's the high. New low for the year. Yep. Made a new low for the year. Broke below this demand zone and closed below it. Big sell-off. Let me open this up a little bit longer duration. Put on 10 years. Yep. So again, this trades in the Forex market. Chinese yuan trending down, but this is the US dollar. So as this trends down, that's in favor of Chinese yuan. Well, heavily manipulated on their country. And Bitcoin, 5-year chart weekly. Here's the low. Here's the high. Green for the week, higher high, higher low. Yep. Look at this midpoint there. Has anyone taken that out? Nope. So yeah, huge volatility. So here's the bottom of the year. Went up, huge volatility. Look at these big red sell-offs. I'll take you to a little bit more deeper insight on currencies. The major, the euro, the yen, the pound. Looking at the euro, we're going to compare it with other major currencies, not just the US dollar, so you have better insight. Again, we saw the euro, new high against the dollar, trending up, Japanese yen trending up, and the British pound trending up. But let's compare them with the other currencies. So this is referred to currency pairs. Euro, yen. When this trends up, it's bullish for the yen. Vice versa, when it trends down, it's stronger yen. Japanese yen, look at that, trending down. Here's the high for the year. Here's the low for the year. Again, the euro and the yen trending down, which is bullish for the yen against the euro. Now we're going to go ahead another euro currency, euro pound, trending down. So this is in favor of the pound. New low for the year also. And we're looking now at the Canadian dollar and the euro currency. So as this is trending up, it's stronger euro against the Canadian dollar. And the euro Swiss franc. Here's the low for the year. Here's the high for the year. Yep. This is still in the trending down phase, giving straight to the Swiss franc. And the euro Australian dollar. Huge tight consolidation range. That was just the euro. Let's go on to the next. Japanese yen. We already did the Japanese yen dollar. We already did the Japanese yen euro. Let's do the Japanese yen pound. When this trends down, that's in favor of the yen. So here's a high for the year. Here's a low for the year. So up here, the British pound was stronger against the yen. And since then, it's declined, stronger for the yen. Big green candle for the week. So it was interesting, because that's giving strength for the week for the British pound. Let's continue looking. Here's the Canadian dollar, Japanese yen. When this trends down, it's in favor of stronger yen against the Canadian dollar. Yep. Almost got that engulfing candle down here. Interesting if we're gonna see a reversal on these. Two safe haven currencies, Swiss franc, Japanese yen. Here's the low. Here's the high. Strong trend here going up, giving strength to the Swiss franc. And then since the high this year is trending down, giving strength to the Japanese yen. Looks like a bullish engulfing candle here. Oftentimes means trend reversal. So if this reverse goes higher, that'd be stronger Swiss franc, weaker yen. Australian dollar, Japanese yen. Yep. From the high of the year, it's been trending down, giving favor to the yen. Again, looks like a bullish engulfing here. Big. See that? Several trade signals we got here on several candles. Interesting. And we're finishes off for the third largest currency, US dollar, the British pound. Yep, we already did British pound, US dollar. We already did British pound, yen, British pound, euro. Let's go British pound, Canadian dollar. And a 5-year chart, British pound, Canadian dollar. Wow, new high for the year. So when this trends up, it's favor British pound. New high in the year against the Canadian dollar. And we're seeing several charts here, the Canadian dollar. Not impressed. Canadian dollar is getting beat up by several currencies. Next, British pound, Swiss franc, both European currencies. If you want to include the island of UK as part of Europe. So high for the year, low for the year, big candle this past week. So when this trends back up, it's giving strength to the pound. It's the Swiss franc. And British pound, Australian dollar, 2 different continents. A tight consolidation, not much of a change here. Interesting. Again, many of these currencies, you could trade as stock ETFs. I showed you the major ones. If you like early access to my videos, I have a subscribers page for a very tiny dollar amount donation. The link is below in the video description here, the Patreon page. You get a lot more content besides what I'm just showing you on the YouTube. If you like my shared videos, consider supporting me with a one-time donation. I have PayPal and Venmo. Those links are below in the video description. Thank you as always for spending just a little bit of your time with me. That's it for the video. Thanks for watching.